Rick Sharga joins us right now, the Executive Vice President at Auction.com. We're talking about a new partnership with Google to create an index of commercial real estate. Glad to have you here.
Nice to be here.
The two of us here from escaping Jerry Brown for the day.
Wow.
Our governor. No, love our governor. I like our governor. I don't know if you like our governor or not. So, but talking about what's going on in the world of commercial real estate and why the measurement would be useful.
So what we've announced with Google, who's an investor in Auction.com, is what we're calling a Commercial Real Estate Nowcast. And we're taking a look at pricing trends, and we're doing them in more or less a real-time basis. We're going to probably sell about $4 billion of commercial assets on our website this year. And so we have access to real-time transactional data that we couple up with Google's search trend information and a survey we do of industry participants to determine which way prices are going. And this month's index, which is the first one we released publicly, actually shows that commercial real estate prices might be slowing down for the first time in many, many years.
How much of a slowdown?
Well, we've been tracking for the last few months that prices continue to increase, but at a slower pace.
Got it.
This past month was the smallest increase we've seen in over 5 years. It was 0.1%. And two of the 5 sectors that we track, the apartment sector and the retail sector, actually had negative prices on a month-over-month basis.
For someone who's been watching the real estate market overall for a long time, Rick, is it a warning sign? Is it alarm bells? What is it in your view?
So what we have to, excuse me, we have to be careful about not getting too caught up in 1 month's worth of data.
Correct. Because
there is some volatility. But the fact that we've had several months in a row of slower growth suggests that the market actually might be slowing down a little bit. Some of the stuff you were talking about in your last segment might be impacting the commercial real estate market. We've had a lot of foreign money pouring into commercial real estate. What's going on in China, what's going on in Europe really does slow down the inflow of that kind of capital.
Yeah.
And that could be having an impact on what we're seeing in terms of pricing and sales volume, which has also been slowing down.
What are we seeing in terms of sort of construction with commercial real estate, and is that a different, the establishment of new inventory?
Yeah, that's something different than what we're covering
Right.
in the index, but we've also seen a lot of restraint in terms of new construction. One of the areas you'd expect to see a lot of construction, for example, is in the multifamily market, the apartment market, because apartments are rented out at 97% occupancy rates across the country, and yet the new construction isn't even expected to meet upcoming demand. So very little construction in retail, a lot of renovation work going on rather than new construction in the commercial market.
Which tells you what?
So there is renovation. So there is construction. There is constructing, just not new construction.
Yes. So it's
there's still a Ford F-150s parked in front of some commercial buildings.
It's the commercial equivalent of the do-it-yourself market. So what we're seeing, for example, millennials are renting a lot of properties in downtown areas. So the retailers are following them downtown, and they're redoing what used to be.
Because there are a couple stocks I've been looking at that do things like HVAC repair, and because this is what I read for fun, is 10Ks about companies that do HVAC repair. But they've been having fantastic years.
Yes. So a lot of retrofitting, a lot of renovating, a lot of multi-purpose facilities going up in what used to be residential or office or retail space in urban areas. The other thing that's interesting is retail is looking at smaller per customer footprints, so smaller stores.
Right.
But because of e-tail, a lot of e-tail activity going on. But what that's driving is new industrial development. So you're seeing the retailers building distribution centers in outlying areas instead of building bigger stores.
You see that with UPS. I mean, you just
Absolutely.
have so much around their major hubs, whether it's Louisville, and just that's just how it's working. What about, though, kind of the demographic changes that we've seen, where you've got the older population, the younger population going into much more of the city and the urban populations? How's that impacting commercial real estate? Are you seeing prices go up as a result?
Well, prices have been going up astronomically.
For a while, right?
Yeah.
But is that toning down even?
So you have to separate what they're charging for space versus what they're selling buildings for.
Okay.
And our index talks about the slowdown in building prices. Rent rates have been going through the roof, and they continue. Well, it's supply and demand.
Yeah.
And as I mentioned, there's just not much inventory available, especially in big cities. There's a 75% difference in the index, for example, in apartment values between major metros and second-tier metros.
Right.
So people are really gravitating towards cities and bigger cities at that.
Interesting. What is the reason for that enormous difference?
Again,
Because we've seen in some residential real estate that the second-tier cities are actually getting a lot of people and big increases in housing value. Cities like Denver.
Denver would probably actually rank as one of the major metros in this analysis. But if you think about it, you're from the Bay Area. San Francisco rents basically are now orbiting Jupiter.
Yes.
They've never been any higher than this. New York's the same way. So if you look at virtually every large...
By some measures, some San Francisco rents are higher than New York rents.
Yeah. Oh, it actually, I believe you're correct there. So we're seeing the supply-demand influx. We're seeing areas that have high-paying jobs where people prefer to live in an urban setting. So landlords are kind of free to raise these rents. The other thing is a lot of the buildings are shifting from rent control to non-rent control. And when that happens, the prices jump up pretty significantly.
How come you're working with Google? How did that happen?
Google invested in auction.com last year. So Google Capital made a $50 million investment in our company, took a minority stake. And they've actually given us access to a lot of their best people. One of them is their chief economist, a man named Hal Varian, who created the concept of a Nowcast years ago. And his theory is that...
former Berkeley economist.
Yes.
Yeah.
His theory is you can use real-time traffic information from sites like Google to augment what you're seeing in your own transactional data. And so we've been able to marry their search trends with our transaction data and come up with real-time analytics. But they've been a great partner for us.
So no waiting for the information. You really know. When you get a snapshot, it really is a snapshot.
It's weeks ahead of what you typically see, and the reality is most of these properties close months after the fact.
So having said that, you're seeing things kind of almost in real time. We got 20 seconds here, Rick. So what does it mean for investors who are looking at commercial real estate? What would you tell them?
It gives them the freshest data they can get.
But what would you tell them about today's market then?
I would it depends on your sector. I would tell them that you have to take a look at this data and figure out if now's a good time for you to sell in your sector, in your market, or if now's a good time to be looking to buy because prices may be slowing down.
So there are places that it makes more sense to buy
Absolutely.
and other places to sell. Okay, got that going on. Thank you.
My pleasure.
Fun to have you here again. Rick Sharga, he's Executive Vice President at Auction.com, based in Irvine, California, but joining us here in our New York studio on this Thursday. You are listening to the Bloomberg Advantage.